Do you agree with Marko Klanovic that we should be buying the dip right now if things are going to kind of, ease up in terms of liquidity conditions going into the rest of the year?
Yes, I do agree. I think that that's a very valid point, and particularly when you talk about overreaction, when you look at the U.S. 10-year rate, it has spiked. And I mean, it's almost a straight line up to 1.78 today. So we know that investors are massively flocking into fixed income, and then we've seen a slowing of a trend on the U.S. equity side, where the indices are at least starting to slow down their depreciation over the past 6 trading days. And we've also seen a drop in the VIX, which really to me says this actually might be the end of the dip. And we might see a few more days, at least over this week and next, where the markets start to rebound and come to a little more reasonable expectations. But really, I agree that fundamentally 2022 looks good for U.S. equities, and the recent action is a bit of an overreaction.
And small caps is really one of your kind of thematic strong points for this year, particularly if you see that pullback in inflation.
Yes, exactly. So when we look at fundamentals, and I love talking fundamentals versus COVID headlines and lockdowns, but to give an example, the S&P 500 is expecting about 8.5% profit growth for 2022, which is extremely good. I mean, this is the type of profit growth that we saw in the years of like 2013 to 2017. And for small caps, it's looking even more robust, where earning profit growth for 2022 is about at 11.2%. So almost 50%, 30% higher than your large caps. And their valuations are overall in general are very attractive. They're really at like below their 5-year average. But obviously a big headwind for small caps is inflation. They're less likely to be able to handle it. If interest rates raise, it makes their higher growth look less attractive, and their valuations get pushed down. So as soon as we see a stabilization of interest rates, a stabilization of inflation, those valuations, particularly on those higher growth stocks, can really pop up. And we've seen the small caps stay depressed from a valuation standpoint for almost all of last year, and particularly the third and fourth quarter. So I think once we get past that, that's when the small caps are really going to take off. And we have to remember that investors are very forward-looking. So it's not that we actually have to wait and see that inflation has got down to maybe a percent level. This could even happen in the second quarter when people start to see those first signs.
Is that why we're seeing that divergence between company CEOs? Because we're seeing more companies actually downgrading and revising down their earnings forecasts, as opposed to sell-side analysts who are upgrading their forecasts and raising their buying outlooks.
Yeah, that's been interesting. In the entire sort of COVID pandemic, since really March of 2020, we've actually had analysts severely underestimating earnings estimates, much more than we've ever seen before. Surprise rates have been off the chart, beat rates have been off the charts. So I think perhaps CEOs are really trying to hedge their bets and trying to just potentially get their estimates revised down. I think now Wall Street analysts are saying, you know what, you guys have been really good at managing both profit and revenue growth for the past 2 years, even with this pandemic. And now that perhaps we're seeing more of an endemic, we're raising your rates. We expect you to do better. And so in this case, I think I'm a little closer in line with Wall Street analysts that I think the growth is there.